Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Lab.com. Welcome to today's recap and look ahead. So here we are. First two-day back-to-back losses, which I don't think is a big deal. But the question is, have we lost momentum from highs, or is this a bigger corrective phase? Because we haven't had a bigger corrective phase in a long time. Lots of traders on the desk they were just like talking it up about how a lot of the stocks underneath the surface are a lot weaker than the indices show, considering we're only about 35 to 40 handles off the highs of the S&P cash, while you have the small caps breaking the 50-day, and you have a lot of the material stocks breaking lower, and you have the IYT breaking trend lines, and a few different things going on besides the lack of power in high beta tech. So, I'm kind of neutral. About a week ago, I did say that I went from 6, 7, 8, 9, 10 positions portfolio approach back to tactical, because I did feel as if with the three major events that happened, whether it was the presidential address to the joint conference, the high valuation Snap deal, and then the pretty much basically being set that the Fed's going to raise 3 times. Maybe that was 3 events in one that caused the exhaustion of this move for now. So you look at the chart of the S&P cash, obviously not the end of the world, but you have this was your little V bottom, the last V bottom we had when President Trump was elected. Then you had this accelerated trend. Okay, the trend has come in and tested the 8-day and rallied up, the 21-day rallied up. The last breakout we had here was at 2300. You had that exhaustion top, which was a sell signal right there. I think this was the day we pretty much got flat when this boom shouldn't have happened. But anyway, somewhere around there. With that being said, though, we've just trickled lower, closing on our lows today, below the 8-day but above the 21-day. So, why, I guess, can't we, not see at least this 2150 area? That would be 2400 to 250, 50 handles. We've already come in, about, 36. But there's been no fear. It's been very calculated, so maybe that's the way it is. This trend line from here comes in pretty much right around there. So this accelerated trend from this V bottom, or actually from more or less from here, okay, which is where we broke out from, it comes into this area. And this would be very healthy. Let it happen. We'll see. The small caps, which I did try and trade that last particular breakout, if you do remember. This was your consolidation, made a new high, came in. I figured I can get long on this day when the S&P was going to 2,400, and all this went above this high here by like 30 cents, got stopped out right there when I figured if it was going to be good, it should digest above this gap and continue. Instead of broke that, much better to sell there than down here. And now it's below the 8-day, 21-day, sitting on the 50-day. So, yeah, a little weaker than stronger. Somebody pointed out the HYG to me today and just said, look how fast things happen. Okay, here, this looked fine. Okay, right? It looked like you had a move that broke above this area right here, above the 8-day. Looked like it was starting to flag, hold this, and then all of a sudden, pow. First podium down day, someone said, hey, I'm going to buy it versus prior breakout, should hold around here. And now look at it, okay? When accelerated trends break, they break fast, and this is actually not a great sign, HYG. But anyway, go back to someone's like, well, Redler, what could you have seen if you were in X? Because X was a strong name. I'm like, you could have seen a few things. First, you look at X. All right, this wide range bar should never have happened. Okay, here was a nice clean breakout. Had it on my notes. Some guys played it. At this point, if you were in it thinking it can go sideways and hold this to continue, boom, that was your out. Or when it engulfed this range, should not have happened. Then you had a small red dog reversal, right, into support. Probably came down too much in order for it to be strong. Came up, lower high, and then back below the 21-day, and now it's breaking below this area, which is not a great sign. Okay, I don't know if that means a reflation trade is over, whatever you want to say, but this right here was your shot across the bow. That was a huge wide range candle that basically said to everybody who bought it in here and didn't sell any, you better be careful. So all of a sudden this rally back, oh, let me get out now. I didn't sell on this. Let me salvage the trade. And then you have a lower high, and then that's where you are now. FCX, a lot of guys haven't been trading this, but they said, Tier, what could you have seen in FCX? Okay, well, first of all, you do have an accelerated trend. Here's your 8-day. Came in, came back above it, gapped up, sold. Never took back half of that. And then really, right around here, if you didn't sell it into strength, should have been your out. Here's your below your 8 and 21 day, and it was actually with a little force, came into the 50-day, didn't bounce, and if you would have sold it 15 and change or here, you wouldn't have been stuck all the way down to the 200-day. That's why we say when you break the 8 and 21 day, you want to get out if you're a momentum player. Okay, this was, this was your first shot across the bow, right? Nice, easy trend going up, following the 8th day, and then boom. Okay, little back and forth because they don't want everyone to know it's game over. And then right here could have been your out, or even here when it broke this level, and still could have saved yourself a lot of money. So you got to, realize when there are these shot across the bows and these big engulfing candles, because it does mean something. I call them a candle to take notice, because you have to move fast as a technical trader, because no one's telling you. An analyst isn't going to tell you the time to sell. Analysts have been saying the time to sell was in 2012. But anyway, that was a long time ago. Especially all the bears have been calling the tops that have not, I wonder if these guys are still around. But so let's just keep moving forward. The banks look best. Okay, so the banks look best. Here, here's your FAS. Here's that wide range bar. I went over it in the morning call. Boom, little snapback, not much. Stayed below that 50% mark, and then started to fill the gap, and now it's closing below the 8 day. So, could it see the 21 day? Yes. Okay, we shall see. But all in all, this wide range bar shot across the bow. You haven't seen one of these during this entire move, ever since breaking out above that. So when you see something like that, sometimes it means nothing. Maybe you get like a stabilization, come up, and then new highs. But when it makes a small little inside bar and then breaks below that inside bar, then it means something, because there's commitment to that move to the downside. Still, all in all, from where it came from, it's not the end of the world. I'm just talking about slight adjustment points for momentum traders if you're trying to play for active cash flow. Let's see what JP Morgan did. JP Morgan, I started telling you, be a little careful after this engulfing bar, and this, trickling down. Again, not the end of the world. It all depends on where you stand. Okay, still not even testing here, which would be a nice thing to do. But if you bought on here the day that it gapped up, you probably have a hard time holding into there. That's why entries and exits do matter. High beta tech, Facebook, I came in long. I am not long it into tomorrow. Actually, this candle doesn't look so bad, but did a little bit of a red dog reversal where it traded above it, came below it. So I had some overnight, traded through, sold some 138s, and then when it came back below 137.82, I'm like, I'm out of it for now. Still looks fine, but I guess if you're trading it tight, it looked a little worse before. If it breaks this, you could see that, and you don't want to be in something like that if you're really active, but it's still fine. Apple, had it overnight last night. Still looks, actually, still a lot of these things, some of these things still look fine. This Apple looks like it's a nice little bull flag hanging right here, looking like it can go. Had it overnight, bought some while it was red, sold some strength, and I guess I probably could have stayed the course here. Let's see, Amazon, what are you doing? Hanging around. So I'm still hanging in there. Tight. The question is, will it break to the downside or break this to the upside? So stay tuned. Google was actually stronger for itself today. Hanging in there still. So actually looking across stocks that I like, they're not so bad. They're just not a lot of power yet. Let's see. Baba tried to be strong most of the day and then came in. Still hanging around. Still in this channel. Getting a little tighter within the channel. So maybe at some point it resolves. If the market wants to continue up, maybe to the upside. If the market is ready to correct more, it could be to the downside. Still hasn't got above this 105 yet. It did get a little bit of juice based on Momo's numbers and how it held. Here's your descending channel here, sideways action. Here's a little, wedge. We'll see which way that goes. I said 28 has to hold for MOMO to stay involved, and opened up above that and stayed above it and closed strong. Big earnings report. Some of you guys are in it, and now you could trade versus gap. A nice few inside days showing digestion above this would be good, and then maybe you get another trade above the post-earnings high. But at this point, doesn't look like a short, doesn't look like a open-up failure. Like what happened with Sina. Remember that open-up failure? Well, that was Sina. Did not happen. With Sina, what did you have to do? You had to get above and stay above 80. Didn't happen. For MOMO, different trade. I know it was a Chinese name. Much bigger earnings, got above it and held above it. That's why we talk about pivots and how to trade momentum. It gets above a momentum level, stays above it, you could stay with it. If it gets above it and fails, run for the hills, which a lot of those things did. I will say, I've been focusing on the XLE for about a week. I don't think their trade's over, but it cost me some money and it's been a waste of time. I don't like trading these oil names, but I figured, hey, the rally's going to continue. Oil looks decent around this 53, 54, maybe XLE plays catch up. But I hate trading, laggard sectors when the market feels a little vulnerable, because sometimes, obviously, if a market does retrace lower, the laggards should be the ones that go down the fastest. So you don't want to be in the laggard sector that hasn't rallied yet. But if you're going to hang in there and money rotates, like you saw with some other sectors, maybe it's a go. But for now, I'm not in it, okay? Because you know what? My trade is this. My trade was for it to go sideways, hang in here, break above this 72.50, and start a new, better move. What happened here, it opened up and failed, closed near lows, so my trade didn't happen. If you're in it from here, cool. Then you're just sitting in it. It hasn't broken that. If it opens up tomorrow and trades through there, I might get back in and it might cost me money. But if it's another failure at this trend line like we've seen for the majority of 2017, I'd rather be out of the way just in case. And if the S&P decides to correct a little bit more, this should be a group that trades down fastest. But we shall see. What did the Qs do today? Yeah, Qs hanging in there, but again, you have to be careful with these upper level bases. So far, not much to be so worried about. Still, around the 8-day, but again, these things could test a 21-day. And here, when you have the Russell testing the 50-day and not having a good bounce off it, you would think that something like this could test a 21-day. So you just want to be a little bit careful. We shall see, though. GLD, people like Red Dog, what could you have seen here? Well, if you've taken some of my classes and you know what the Red Dog reversal is, what's this? Traded above a high, 119.88. I remember it that day, came back below it. That could have been your sell signal if you were long from here. And that could have also been your short signal if you thought, hey, just traded back into where it broke down from. It's failing at this area. Let me be short a little bit. And if you shorted a little bit, good spot. And now it's below the 8-day, it's below the 21-day, and look at that move. And it's below this accelerated trend line here. All right, last time there was an adjustment area was here. You could have covered your shorts, want to reclaim the 8 and 21-day, and then maybe reshorted it, up here or up there, or if you bought it here, there were levels to trade, and now it's just floating down. I guess the next level here would be into this zone, but the moving averages are curling over and it's in no man's land right now. That was your adjustment point. And I like to point at them because this at some point down the road will happen again. And it's good to take notice. Sometimes you take notice and it doesn't equal a huge swing trade like this. Like here, looked like, no, this one's not the same. This one, I guess, was a little bit similar. But what did it do? Came in, held the 8-day and continued. What did this one do? All right, well, anyway, from a higher level, a little bit more meat on the bone to correct from, and it wound up producing a bigger move. This one actually, you could have at least had a day and change move. If you sold it here, you could have bought it back at the 8-day. But anyway, they don't always equal huge moves, but this one equaled a better one combined with this trend. At the same time, you had the GDX, which fully diverged from it. GLD was going higher, and right here, the GDX was going lower, and then boom, this is when it broke the 8 and 21-day. So if you got long the GDX when it broke above this 20 and change, and you follow that strategy because it's been above it right here, you could have been out of it when it broke below, this 23.80, and then you saved yourself, 3 points or so. And just that's how you use moving averages and price, especially when you see a divergence from what should be a key indicator. GLD went to weekly highs and this thing was coming in. They're like, what's going on here? Why is there a divergence? Well, when it broke below this, oh, that's why it's a divergence. The miners are that weak. And now, I don't know, it's coming into some support, but it doesn't look like much to me. So with all that said, at this point, it's been a little tricky. For Redler All Access, we've been trying to be tactical and make some money with different types of setups. It hasn't been that easy. The move above 2,300, I feel like we caught that real well. There was power. And now there are some longs, there are some shorts. Things are failing. Things are hanging in there. The leadership is getting more narrow. So it's just some things to acknowledge and be cautious about. Some of you guys did real well with Snap. If you did, congratulations. At this point, we talk about points of reference. Okay, and every day I think T2 Live has been doing a blog post of it. Here was your day 1, took out 26.05, gave you a day 2. Okay, if you were still long, it opened up. Okay, verse there. Usually when they open up, you sell some. I always sell a third overnight, and then when it goes red, I sell the rest. And that happened in here. If you're waiting for a complexion change, for weakness to come, it should never have broke below this, and it did. And if you see the size of this potent engulfing bar and you went home short, you got paid, or if you got out, great. And now, what's our new point of reference, right? We talk about point of references. It's the fourth day. Now, you have 2064. That's your price discovery. It broke 2350. This is your new point, your little price discovery. You also have a gap here, so who knows? Does it, open up, fill this gap, and put a bottom, a little bit of a topping tail here again? Does it open up in here, go sideways, and then trade into it? Or who knows? The overnight is not, something you know until the next day. But for yesterday, a little bit more clear cut that this trapped both days of buying, so people would be scared if it broke below there, and then that was what produced today. So at this point, you have a point of reference. It's not blaring. It's not a blaring long, and from 30-ish or 29.44 down to 20-ish, I'd be careful just shortening this, saying it has to go to 17. If it has to go to 17, or if it goes to 17, first thing it's got to do now is get below 20.64 and stay below it. That's how you use price, and that's how you try and think about things day by day, especially when a stock's only been trading for 4 days and you're looking to trade things with a plan. A lot of guys made money, good money the first 2 days long, and the same guys could have lost money short if they didn't do it the right way. But anyway, I'm moving on. I'll see you in the morning. Have a good night.